GM, so are we going to see a Santa rally in the markets? It's a very well known phenomenon in the stock market for the last 5 trading days of December to offer a rally and the first 2 trading days of January. That's known as your Santa rally, and on average, the returns in the S&P are 1.5%. Doesn't always happen, but that is the average returns over the past 60 plus years. So how does that translate over to Bitcoin and wider markets? Well, let's dive into it today because we have lots of different factors affecting the market like OPEX going into December end. So without further ado, looking at the Bitcoin chart, 1 hour time frame. On the weekly open, we had a flush down to fill in the CME gap and have since then rallied up, reclaiming that weekly open level. This is one of the best setups you can see because if I go to the weekly chart on Bitcoin, notice that every weekly candle tends to have an upper and lower wick. So when you see that the lower wick has been put in right at the beginning, that's a good sign because that means the longs have been flushed out, the early week longs, as well as the bears, they've been trapped at the lows. And that then catalyzes a move up because then you have shorts to squeeze and that fuels a rally. And even as I'm recording this, we're seeing Bitcoin pushing up to that monthly open level, that previous high of last week's candle, taking that liquidity. So interesting to see now, do we start actually filling in this H4 gap or do we reject at the beginning of the gap, which sits at 90.6K? You guys in my Discord will know that I mentioned we're likely to see some sort of short squeeze today due to the fact that on Deribit, if we look at the options, this is the year-end OPEX, the biggest options expiry of the year. Notional value is absolutely huge, sitting at 24 billion. That's a lot of open interest, a lot of positions. And you have the largest amount of puts sitting at 85K. So these are people betting on the market to go down through options. And the largest amount of calls are sitting at 100K, people betting on the market to go up. And it expires on the 26th of December, last Friday of the month, 8 a.m. UTC. So that is coming in a few days. That is this Friday. Also to mention, we have a bunch of calls at 106, 112, and they're really stacked to 118. But right now we're sitting in between 85 and 100. So the puts are in the red because these guys are betting on the market to go down. And the calls are in the red because they're betting on the market to go up and be above 100K come Friday. So right now you're actually seeing those with puts at 85K. They are the stressed positions right now. They're the ones having to cover their positions, hedge their short exposure. And how do you hedge a short? Well, of course, you hedge a short with a long. And that's why we're starting to see, since we got a trap below 85K last week, guys, these levels aren't magic. This is the real TA that you don't see on YouTube. So if you appreciate this level of knowledge, please hit that subscribe button, turn that bell on, drop a comment. And if you want to join the school, just message me on Telegram. First link in the description. We're all absolutely killing it in there because we know what's going on in the markets. We don't use stupid triangle patterns and try to predict price. No, we understand the real dynamics that actually move things. And last week, you got a trap below 85K. Anyone with puts trying to force price down to get themselves in the money got absolutely wrecked. And the signal was on the reclaim that they're likely to get wrecked. As soon as you see this candle reclaim 85K with a strong impulse and you consolidate above it, well, that was your sign that we're likely to actually start squeezing out those puts because they've had a failed breakdown. A failed breakdown is a bullish setup. So no surprise that we're seeing price squeezing up now to 90.3K this monthly open. So far, as I'm recording this video, we've rejected at the early part of this gap, just shy of this gap. So really watching this monthly open level, that last week's high as well there. Can we flip and hold above that? If so, then I'll be looking for price to potentially start actually filling in this gap. But if we reject here, which is where you'd expect price to reject, then all eyes on the New York session to see where dips get bought. And dips towards this weekly open should really get bought up if we are going to squeeze those puts at 85k, and this is going to go into the 90s and potentially towards December from sea level, or even the yearly open at 93. And who knows, maybe even beyond if the rally gets exciting, because crypto's been pretty bogged down recently. There's a lot of disbelief. There's a lot of rec players. Retail are nowhere to be seen. So the recipe's there for a short squeeze. There can be some pain there, and it doesn't take much for Bitcoin to rally into the 90s. There are no real key levels in the 90s until you get to the yearly open at 93.5k. So interesting to see. Watching that monthly open level, can we flip and hold it, or do we reject it? If we reject it, where do we find support on dips? Because dips should get bought if we're squeezing those puts. We shouldn't see price now start back testing the weekly open as resistance, because then actually we're looking towards 85k, as I talked about on the weekly outlook last night. This could then be a level where you either can actually break down if those puts get in the money, or again, could actually set up another bounce if you see this same scenario. But that's a way away. Lots to do before we get there, but just trying to paint the picture for you guys of how I'd trade certain scenarios right now based on the context of OPEX and the year-end movements. But overall, that's the least likely scenario until we start losing the weekly open and back testing it as resistance. Most likely scenario is up at the moment to continue this short squeeze. So weekly open's the trigger. That's what you want to look for in terms of support. Monthly open, that's what you want to look for in terms of resistance. Do we break and hold either of those levels? And that can give you a little bit more directional signal into the trading day ahead. So that is Bitcoin on the 1 hour. Watch that support. Does it hold? And watch the monthly open. Does it flip? And above the monthly open, as I said, we got this H4 gap. We got the December FOM C level where the interest rate decision was made. So far, we reacted bearish to that. So it's going to be an interesting level to back test. Can we get above it and actually show some bullish reaction? Price actually being above the recent interest rate cut, which it hasn't done at all this year. It's dumped every single time. So that would be a change of character. And that can then start catalyzing squeezes, because anyone positioned for interest rate cut being bearish in December, they're wrong. And that is the logic behind a squeeze. If you're wrong, you have to close your position. If you don't close it, you get squeezed. And that can actually catalyze moves further and further to the upside if we do continue getting a short squeeze. But that's why you initially look for rejection or flip and hold of any of these key levels that I'm mentioning. So that's Bitcoin. When we're looking at the week ahead, so I am posting on Twitter now occasional updates of the market, my advice as a trader and general wisdom, as well as some weekly updates. So Saylor's expected to announce another Bitcoin purchase Tuesday. Tomorrow we have US Q3 GDP. So this has been delayed, but it is that advanced GDP, I believe. So that's going to be pretty interesting to see how that comes in. If we go on Forex Factory, it is the prelim GDP, which I don't think is the most interesting. Let me have a look. So US government, previous listed, final GDP. Yeah, advanced GDP is always the most important one. But prelim GDP is coming out now. So tomorrow we're going to see the US economy. What state is it in? The forecast is for it to grow 3.2% in Q3. But let's see where that number comes in. If there's a big miss, that's what can catalyze volatility. But it's pretty certain that it is going to be growing. So main thing is to watch for, do we get a big swing either side when it comes to the prelim GDP? But rest of the week, as you saw in the post, is going to be all centered around these OPEX levels. So how do we see 85k and how do we see 100k play out if we do come close to those levels? Or are we going to close just somewhere in between and really squeeze out these 85k puts in the coming few days? That's the big question when it comes to Bitcoin and what I'm going to be looking at. And they're the dynamics that are affecting the market right now. So just looking at high time frame view of Bitcoin. So jumping to the 4 hour here, we're in this range between 80k and 94k. Of course, everything below 84 has been a great buy. Everything above 90 has been a great sell. So coming up towards the premium zone now. Really becomes interesting if we can start getting above that 90k, because you've got a lot of targets here, a lot of liquidity to take, a lot of price action to squeeze into, and it doesn't take much to put price up into 91, 92, 93 to actually start targeting some of these areas. There is really no known resistance here, as I said, until that yearly open level. So to the upside, that's the zone you got to watch, and to the downside, of course, 85k is that big contextual level that I'm going to be taking a look at in the market closely. Do we find support there, or do we actually catalyze a move down, much like we did on that Ibit options expiry that I mentioned some time ago, around that 50 level, where if we go to Ibit, you guys will remember we had that 50 level as the big options level, and that was over here. So let's mark it out 50. And if you remember, we started pushing below it, and that's what catalyzed a move, which ended up being the actual bottom for Bitcoin. So if you go to the Bitcoin chart, let's put it up actually side by side. So if we go like this, go to Bitcoin, go to the 4 hour, you guys will remember, if you've been watching the channel, that was exactly when Bitcoin was having its flush down, when Ibit lost that 50 options wall and the puts all got in the money. And this is when Bitcoin really actually started taking off to the downside and eventually bottomed out over here. So that's also how you can see these moves play out if you do break that options level, which I covered yesterday on that weekly outlook video. So that's another thing I'm watching in the markets. Let's go back to this Bitcoin chart for now. Let's get that range up. So 85k is, of course, an interesting level, but so far we're squeezing shorts, and it doesn't look like 85k is going to come unless we start losing the yearly open in some of those levels. So that's Bitcoin on the 4 hour. On the daily, of course, there's a higher time frame view now. We're really in this consolidation in this box, and we want to see which way does this box resolve. Eventually it's going to break one side or the other. It's just a matter of when and which direction it breaks. So that's what you're looking at from a daily perspective on Bitcoin. Can we flip these daily bands green? So far they've been red this entire time, but it has been slowing down. We have been going sideways, haven't been breaking down, but also not been breaking out. So can we get that 12 EMA band above the 21 EMA band like we do in every single big rally that comes on Bitcoin? You only have to look at the charts to see every big rally always has green bands. So if we are going to have a big rally, it's going to have green bands. Just sometimes you get smaller moves that are fake outs like this. But bottom line is, you never have big rallies when the bands are red. Simple as that. So that's what I'm looking at on the daily time frame. Of course, you got those key levels that I've been mentioning too. And really, that high time frame signal that I've been talking about in my videos, the 100 EMA in the middle, you've got the 200 EMA above, and you've got the 50 EMA at the bottom. So purple, red, blue, 50, 100, 200. They flipped in bearish order over here on this day. And to the naked eye, you'd think, oh, that's a bearish signal on Bitcoin. But as I showed you guys, previous examples, you have to go all the way back to 2022 for this signal, the last time it actually fired, where these bands went in bearish order, which was over here, 200 above the 100, above the 50. You can actually see it led to a consolidation, which generally just kept squeezing upwards, and it does actually kind of look rather similar, doesn't it? You got these higher lows, and you keep squeezing, and we're potentially somewhere around here if it is going to, play out similarly. Of course, nothing plays out the same in the markets. The markets rhyme; they don't play out one-to-one. But could we be going into some sort of squeeze like we had here, which can overall, as I mentioned, lead to price going down and can be just part of the bearish downtrend. But as I said, in a downtrend, you can still squeeze shorts and you can still have great rallies and upside movement. And we have upside targets on Bitcoin, of course. So, as you can see now, looking at this chart, it looks pretty similar. You got those high lows, high lows. Are we now gearing up for a squeeze up? And if so, we then look for, does it reject there? Or do we actually squeeze a little bit higher and then reject later on? Those questions will be answered later on. We'll have to look at price action as and when that comes. But interesting to give you guys an update on that high time frame signal that I mentioned a few days ago now. where we've got those bands in bearish order. Can we see that pattern play out where that does actually lead to choppy upside conditions before an eventual breakdown later on? So that is Bitcoin. We look at the data. What are we seeing? Well, monthly open, key level to flip and hold, as we can see. Perps have been really bidding this market up since 85K. Spot have actually been selling way harder, but it's getting absorbed. There's clearly a passive bid on Bitcoin here. You guys remember, it's quite key to hold these higher lows when you do have the passive bid on spot controlling the market. And as soon as you see the high lows break, that typically leads to actually bearish price action because it's a change of character. You guys watching my videos will remember last week when we started breaking the higher lows led to that move to 85K. So this was a higher low, this was a higher low, and we're seeing it was really just a passive bid in the market because generally spot CVD was down, whereas perp CVD was up, holding the market. So when we saw this first higher low break, I told you guys that's likely going to signal a move to 85K. And now we're just seeing that on a micro level a little bit more here. When we've got higher lows forming, do we see one of them break? That's going to be a big tell in the market for where we're going to be going. So I'll be watching that carefully. But outside of Bitcoin, a lot of interesting stuff has been happening in the market. So got gold really pushing up, stocks pushing up, dollar pushing down. So if we take a closer look at gold, gold is actually having an all-time high breakout. Should be no surprise. You had a 10-day consolidation here. Cause and effect. It's now breaking out above the consolidation. All else being equal, this should lead to continuation higher for gold. Now, the biggest signal will be if gold actually does reverse this rally and fall back below all-time highs. That's then showing you that the rally is failing, the breakout's failing, and can be your biggest bearish sign for gold. So be watching that closely. Should continue higher after a 10-day consolidation breakout. But if that fails, that's a signal in itself on gold. So GM to new all-time highs on gold. Absolutely amazing charts, been absolutely rallying. You've got silver rallying, copper rallying, all these metals rallying, and gold is still pushing to all-time highs. So going to be very interesting in the New York session today, where we get a lot more volume coming in to see how does gold actually react. Is this going to be a false breakout, or are we actually going to hold this daily breakout? So I'll be watching that daily close carefully today. Is this a trap, or are we actually gearing up for a new leg higher? The signs point towards, reason for this to be a potential trap, because you got silver, really taking over, and that's going to be taking liquidity away from gold. Gold's rotating, those profits are rotating into the lower caps like silver. And you've got things like even platinum, when you take a look at the chart, absolutely mooning, almost at all-time high. So again, it's liquidity getting taken away from gold. And you've got copper as well, close to its all-time high. Absolutely beautiful chart. So when you go back to gold and you're seeing it break out here, does it have the energy? Does it have the focus and the capital focused on gold for it to hold this breakout? Very interesting to watch. Daily close is, of course, in 9 hours. So let's see if we can hold that breakout, or if in either today or in the coming days, this ends up reversing and we fall back below that previous all-time high at 4.4K. So very interesting. Stocks coming close to all-time high now themselves. So Santa Rally is definitely in action in the stock market. So close to all-time high. It's got a bid. There's a reason to bid it going into year end. Got a CME gap on the 1 hour that's formed here. So I think when the New York session starts, any dips into this gap should hold if we are going to go for a push higher in this move. If you lose the gap, then I'd really be watching this gap over here, this to hold, and price to find demand there before rallying higher on any dips. So that's what I'll be looking at on stocks. You'd want to see this gap hold as your lowest support, if not the CME gap. Hold that and push higher. That would be where you want to see demand actually step in at one of these two areas. Of course, lose this support and it's likely actually setting up a bearish move on stocks. So that's what I'm looking at in the world of stocks. When we look at Ethereum, we're seeing similar setup to Bitcoin, really. Filled in the CME gap, reclaim the weekly open, just much weaker than Bitcoin. It's not been able to close above and make a new high since that daily open, first hourly candle. So yes, it's filling in this H1 well, this higher time frame gap, really. Not sure what time frame this is on, but maybe something like a 4 hour, you can see this gap a little bit more, or maybe something like a 2 hours actually better. Or you can mark it out like this if you like, however you prefer to do it. Overall, the reason I mark this box is because it's an area of inefficiency. And these areas of inefficiency tend to fill in. So we're starting to fill it in. ETH can get dragged up by Bitcoin. If Bitcoin's going to continue short squeezing, expect this to probably fill in its gap. But the better long is going to be on Bitcoin because it's outperforming ETH. Really not much interest in terms of longs because of that. It's relatively weaker. So that's the full market update, guys. Hope you enjoyed. Back with another video tomorrow. Let's smash the week. Again, if you want to join the school, just drop me a message on Telegram. Love to have you guys in. GM.